All right, guys, let's talk about the anatomy of a swing trade. Some people have been asking about swing trades. Let's talk about how you make $1,800 on a swing trade. Okay, now we're looking at E-mini wheat. This is wheat futures. Okay, and I'm using this product because this product has some really nice movements. We're looking at the 1 hour chart, guys. 1 hour. Okay, it's 20 days chart, but 20 days in 1 hour increments. Okay. Let's take a look at this. I'm going to show you how you make $1,800. And this is a technique that a lot of swing traders use. I use it. A lot of you guys, excuse me, a lot of you guys and gals might want to employ this in your own trading style and strategy. And two reasons why I'm picking wheat. One, it's very inexpensive. So right here you can see it's $412.50 to take one contract, okay? Now, when I say $1,800 worth of profit, we're talking about 10 contracts. So that'd be about, $4,100, $4,200 worth of a margin you would need in your account. If you got half that, then we're talking $900 profit, okay? So you can do the math just by looking at, you can just pause the video. And this is the TD Ameritrade TOS platform, so we're looking at their data. Every broker is a little bit different, but it should be approximately in this area for the margin, okay? Some are going to be a little bit cheaper, some a little bit more. Okay, so you can do that for your math. All right? So let's talk about the anatomy of a swing trade. Let's go back to and find. Okay, this is as good a spot as any. You see, this blue line is the 50 simple moving average. In this case, since we're talking about hours, this is a 50-hour moving average. Okay, this is very common. It's used in daily cycles. It's 50 is a very common average used in a lot of trading. Okay, so this is the 50-hour moving average, and what I want you to notice is that from approximately at this time, which it doesn't really matter. This was a Wednesday. Okay, kind of late Tuesday, early Wednesday. What I want you to notice is that all the candlesticks, for the most part, are trading below that 50-hour moving average. There's a few places where it gets above it, But for the most part, you can see that most of those candlesticks are trading below the 50-hour moving average, okay? But we're going to talk about here is we're going to set up for a long side trade. So we're watching it. You're keeping an eye on it as part of one of your watch lists, whatever you're watching it, it's coming down. Maybe your money's tied up in something else, so you can't trade wheat. Okay, again, it doesn't have to be wheat, but I'm using wheat because it has really good cyclical patterns and a lot of very predictable price movements, and that's very, very helpful for trading, okay? And plus, like I already said, it's fairly inexpensive to trade. So we're watching this thing come down. It's below the 50 hour. It's below the 50 hour, okay? And that's great. But I want you to notice down here also at the very bottom is the MACD, okay? And right around the same time it got below the 50 moving average, because the way the MACD is configured, and you can look at it here, it's just, this is probably standard, but 12, 26, and 9, probably standard, but some of you can change it whatever you want. That's what this one's set up as. I want you to notice this purple line down here. This is the zero line. I mean, what you're going to notice is the MACD is below that purple line the entire time. Okay, so not only is it below the 50-hour moving average up here, it's below the purple line or the zero line on the MACD. Okay? Right, so then we get over here. And I want you to look at right here. So another Thursday, it's a Thursday. Maybe just past midnight, because remember, this is a futures product, so it trades overnight too. Okay, and somewhere right around there, we decide to take a long side trade. Let's say it's even on this red candlestick. Okay, and that red candlestick closed at 722. So remember that number, 722. Okay, you decide to go long. Okay, let's move to the right here. And let me just keep going till about right there. Okay, so here we are. We went long back here on probably, I guess, that candlestick. Yep, that's the 722. Let's just put 722 there, even though it's going to possibly move when I move the screen, but that's 722, okay? And the MACD crosses over, right? The blue line, which is the fast line, goes above the slow line. Okay, but it's not above the 0 yet, but we're going to go ahead and trade it a little bit. If you're trading the MACD, this would be considered aggressive. if you're trading the stochastic momentum index, you're way behind, but we're going to talk about that in a moment here. Okay, so we're just looking at the MACD for a second. We take a long side trade. It happens right here. Okay, it starts going up. Yes, you're going to have to stomach a little bit of volatility or movement in price. If it goes above the 50-day moving average, or 50 hour, sorry. Right around the same time, of course, the MACD goes positive. It gets above the 0 line, the purple line here. Okay, let's watch what it does. Remember, this is an hourly chart. Goes up. You know, a lot of traders are watching their PL, their profit loss. They're happy. H for happy. They start getting sad. S for sad. Okay, not the way to trade. We don't trade on emotions. It's really hard to separate emotions from the PL. Right? Your profit loss. Remember, we're talking about the anatomy of a swing trade here. Okay, it comes down, it touches the 50-day moving average, and it stays on the MACD, it stays above the purple line. We don't get out. We don't get out of this trade. Remember, this is a swing trade, not intraday stuff. Okay, this is the hourly chart they're watching over a period of days. Okay, it comes down, touches the 50-day, but it doesn't go through the 50 hour moving average, and it doesn't go below the 0 line on the MACD. As you can see, they're both moving in similar fashion. Okay, comes back up. We're not going to talk about this anymore, right? We're not going to talk about that anymore. We're not going to do that, correct? Okay, it comes down, touches the 50-hour moving average. Okay, the MACD comes down but stays above the purple line. Okay, it goes up again. And these type of cyclical, patterns are really, if you look at the stochastic momentum index, that's what you're seeing. Yes, you could trade those, okay, but we're going to stay away from that for now because this is a swing trade. Okay, price comes up, takes a dip, touches the 50-hour moving average again, but the MACD is even giving us better guidance on what to do with this trade because it stays above the 0 line pretty well. This time it doesn't even come down and touch it. We go all the way up. We're getting really happy now, right? Comes up, comes down, okay? Pierces the 50-hour, and the MACD goes below 0. We close the trade, guys. We could either close it right here if you want to, because it's significantly below, or you could wait until the fast line on the MACD pierced it, which I know it's not a perfect line, but that's a few hours later, probably like right in there. Okay, so there's your entire trade. Okay, that's your swing trade. It started from here on basically early Thursday, probably just after midnight or something. When did it start? 2 a.m. in the morning. That's right. If you're going to be a trader, you may have to be up at 2 a.m. Or you realize that something's going on because you're paying attention, and you set your alarm clock and you get up, guys. I did that this morning. I had to get up at 6 a.m. Okay, to take a look at a trade, even though I had my risk management trades in there. That's just risk management when you're sleeping is like, taking care of the big scenarios, right? But I got up at 6 a.m. and I stopped out on I didn't stop out, I actually took a profit on a trade. It was like $60, but I did it anyway. Okay, $60 over a period of a few hours, I'll take it. So anyway, I'm just saying that when you're trading, you may have to sometimes get up and do it. Don't be lazy. Okay? If I had gotten up, it was $300 or $400 or $500, I probably would have slept a lot better. But $60, okay, I went back to bed. All right, so what's the deal? What happened here? Okay, you can rewind and watch this video again, guys and gals. All right, and let's calculate what the profit was on this long side trade from here all the way up until we got out right there. Let's go do it. Okay, I'm gonna switch over to a spreadsheet, and we're gonna talk about the profit that we took on this trade. Okay, so here we are, guys and gals. Now this is a spreadsheet that I keep. Some of this is a little bit outdated because I haven't touched some of these in a while. I used to do when I was first learning futures quite a few years ago, this is a spreadsheet I put together. Okay, you can pause the video and look at it if you want to. Okay, after the video, come back and pause and look at it. Okay, but this really helped me out in the beginning. I don't really need it as much anymore, though I still come to it once in a while just for quick calculations. But a lot of times I can do this stuff in my head simply because I've been doing this a long time. Okay, let me move the spreadsheet back over to the left. Okay, so you can see what's going on there. Okay, we're talking about XW, this product right here, XW. All of these on the 2S platform would have a slash in front of them, guys. Slash, all. This is all futures, okay, obviously. Okay, so we're talking about this one right here. The quantity is just the number of contracts. Okay, if you can't afford, right now we already checked futures, the E-mini futures for wheat. Okay, for wheat is $4.12.50 and $4.12.5, that is, per contract. So if you're taking 10 contracts, you're going to need this in your account. Okay, if that's too much, no problem. You just change it. If you do you have 2,000? Do you have 1,200? Whatever it is. Okay. If you've got a lot of money in your account and you're talking 100,000 there or a million there or whatever, and you want to trade wheat, and hopefully those people are watching my video too, okay, well then you can take on the big contract, and that's ZW. Okay, this is BZ instead of X. I don't have it on here because I don't trade the ZWs because they're a little bit too pricey for me. Okay, but if you want to trade the ZWs, you can. Okay, you just, I don't know what the margin is. I'm gonna guess that it's, I think they're 1/5, but I'm not sure. If I remember right, it's 1/5. It would be like $2,000 for the big contracts, but I could be wrong. I'm not sure if it's 5 or 10, but it doesn't really matter. Okay, so, and then the rest, you'll have to go over to CME Group, guys and gals, if you want the specs. CME Group. I talk about this all the time, but I'll put it up here. Just type in your favorite search engine, CME, and then just put in the word wheat. CME space wheat. Your search engine is going to come up and you'll see a CME Group. Just click on that and you're looking for specifications. I'll just put spec for short. And look at the specifications, okay? And in there you're going to get something called tick size. T stands for tick. 0.125 is an eighth. Okay, bushels, I think wheat is in bushels, okay? So a little bit foreign for a lot of you guys and gals that don't trade futures, okay? So that's the tick size. We use ticks in futures. They're called ticks. The smallest price movement that can happen in futures is called a tick, okay? And there are a bunch of ticks make up a point. So PT stands for point. Okay, so it's $1.25. This is dollars. $1.25 every time the wheat moves one tick, okay, or moves an eighth. And of course, to make up 1 point, 8/8 make up 1 point, right? 8/8 makes 1, right? 8/8 would make 1 point. So eight of these guys, 8 of these ticks, or 8/8, because that's the decimal version of an eighth. Okay, remember your fractions and decimal equivalents, guys. Get out your calculators, spreadsheets, whatever. I do this stuff in my head because, whatever, I'm into mathematics. But 1/8, so 8/8 make a point. So that's just handy. You might want that in your spreadsheet, okay? I like I said, this stuff is kind of basic for me nowadays because I've been doing this a while. Okay, I'm just scrolling to the right here. Okay, we're still on this line right here. Okay. So how many dollars is it for every point? It's $10. Okay, you just do 8, that number times that number, and you get 10. E-mini wheat's description. Back then, when I was getting started in futures, I was interested in knowing what volume was. I didn't want to get involved in products that didn't have good volume. Okay, I put just my kind of way of saying it's okay to trade this product because it has good volume. See, I might not trade platinum. I can't afford it, but I might not trade it because it just has good. Look at this one, fair. Of course, nowadays eMicro Bitcoin is probably very good or excellent. Okay, but anyway. Okay, so if you remember right, to the left I had 10 contracts and total number of ticks, just some simple math. Okay, 180 ticks, doesn't really matter. I won't dive too deep into all that. Let's clear this out. Okay, and we're still on this line right here. Okay, so I remember the number 722. There it is, 722. And where was the end price? After it broke that 50-hour moving average, or it broke below the MACD zero line, it was 740. There it is, guys, $900. Remember I said 1,800. This is 5 contracts. Let's move back and change it to 10. Okay. Change it to 10. And what do we got? Well, there it is. There's the $1,800. Okay, so that's a swing trade. $1,800. Let's switch back to the chart. We'll finish up the video. Okay, and let's talk about how long did it take from the beginning of that trade to the end. You know, how many hours or days went by to make this $1,800 on 10 contracts, okay? Or 905, or whatever you can do in your account. Let's go back, switch back, and we'll take a look, okay? At this one right here, okay? So let's just call that Thursday. I think it was like 1 a.m. So just call it the beginning of Thursday, okay? So there we go on that. And it broke through, and we got out either on this candlestick, or if we were waiting to be a little more patient, we got out probably right about here where this fast line broke through the zero line. And, you know, that might have put us at this candlestick or somewhere around there, whatever. Okay. But I think we took it at 740. Yep, which was that candlestick right there. Okay, this one. Okay, so how many days was it between here and there? Okay, well, the beginning of Thursday, and it looks like it closed about not quite halfway, but let's just call it halfway through Thursday. So a little more than a week, like a week and a few hours. And when I say week, I mean 7 days, not your 5-day business days or trading days. So a full week, okay? So think about it, guys. Would you be happy with $1,800 in a week, 7 full days? Or, you know, that might be, like I said before, it might be $900 for those of you that couldn't trade as big, or even $450 if you're doing 2 or 3 contracts. Okay, would you be happy? I think I know the answer to everybody would be happy. Almost everybody would be, right? That's the anatomy of a swing trade, and that's how you do it. Okay? Now, it may not always be this obvious and this good. You may not always get this good where it's, you know, everything is like perfectly set up for you and just, you know. But the premise and the concept behind the swing trade will play out time and time again. That's how swing traders do it, okay? And if you're looking at the daily chart is going to help you, and even weekly and monthly charts, but, you know, daily chart especially and weekly charts will help you and give you a sense of where is the large trend. What are we trending, up or down? And even the daily chart will help you. You know, you're using the same thing you're looking in front of you right now. You're looking at the same indicators. You're using, everything is the same. You might even have the same 50 simple moving average sitting on your daily chart, so you have a sense for the overall trend. Is it up or down? And then you come and look at the hourly chart like you see me doing here, like I just talked about and showed, and you set up your trade. Okay? And remember, guys, in futures, it doesn't matter. You wanted to take the short side trade and play because it was below the 50-hour moving average all this time over here. Go for it. It doesn't matter. In futures, it makes no difference if you're trading long or short. The margin is the same. You literally could have took the short side trade all the way down through this, looking at the MACD below the purple line the entire time and below the 50-hour moving average. And then when it switched on you about right there, you just close out your position. You literally turn right around. Okay, if you want to be a little more patient, you could get in over here. But you probably giving away a little bit of profitability. You can turn right around and just play it out all the way to there, guys. Okay? That is the anatomy of a swing trade. Okay? And that's how we do it. It's I think for a lot of people, they really struggle with when it's going to do this and then come down and touch the line and they get into panic mode and blah. You know, I know it's not easy, okay? But you really have to try to separate out your emotions, okay, from the anatomy of the trade, okay? You would only get out of this trade right here in this particular little SMI cycle, okay, or even that cycle right there, that oscillation, is if it really broke down below and really took out that 50 moving average and really broke down below the zero line on the MACD. But you could tell that it didn't, right? It stopped short of it and turned around and went up. Okay? If you want to get out and be like a little bit more, you're kind of going to be taking what I call a little bit more of a choppy trade. You're going to give up some profits and commissions and stuff like that. You know, you could get out here if you wanted to. You know, if you got in like down back over here and you know that the MACD is strong and you waited till it got up to this point here, and even this candlestick looks kind of like, okay, good time to get out because it's got that, it very much looks like a shooting star candlestick right there. That's okay too. You can use those strategies and as well and be a little bit more short term and say, okay, I'm not comfortable with a shooting star and staying into it and then, you know, sweating out this touch right here. Okay, and even down over here as well. Okay, that'd be a much shorter term swing trade over a period of about, what, 2-3 days rather than 7 days. Okay. Okay, guys and gals, I really hope you enjoyed this video on the anatomy of a swing trade. Okay, wheat is one of those products that you can make a lot of money on if you're patient, okay, and you employ good technique and try to separate the emotions from the anatomy of the trade. Please subscribe to my YouTube channel, guys and gals. Go ahead and give me a thumbs up. I really appreciate it. Don't forget to click that little bell to be notified of all the videos I put them out. We'll talk to you all real soon again next time.